Hello and welcome to a discussion on how to record income statement and balance sheet transactions on a spreadsheet. Understanding how each transaction changes the accounts will help you to easily record journal entries. After viewing this video, you'll be able to record revenues and expenses on the spreadsheet and record the assets and liabilities associated with the revenues and expenses. You will summarize accounts and prepare financial statements using the spreadsheet. Revenues are recorded when the goods or services are provided to the customer. An asset is received for revenue. The asset is cash if the customer pays in the same time period the revenue is earned. The asset is accounts receivable if the customer pays in a future period. An expense occurs when a service is received by the company or an asset is used to produce revenue. There are three types of transactions that change expense. First, a service is received and cash is paid in the same period. Second, a service is received and payment is made in a future period. Paying in a future period creates a liability. Third, an asset is used to generate revenues. There are 5 general transactions that occur repeatedly when a company conducts business. Business consists of providing goods and services to customers and receiving services and using assets in order to provide to customers. Take a moment to read through the different transactions that consistently occur. There are a few others, but these are by far the most common. There are 5 questions that should be answered when recording transactions that will help you identify the accounts that are changing. First, was a good or service provided to the customer? If yes, record the revenue, and then determine if cash was received also. If yes, increase cash. If no, increase a receivable. The second question is, was a service provided to the company? If yes, record an expense that describes the service, and then ask if the service was paid for in the current period. If yes, reduce cash. If no, record a liability using an associated payable account. The third question is, was an asset used? If yes, reduce the asset and record the descriptive name of the expense. The fourth question is, was a liability repaid? If yes, decrease cash and decrease the liability that was paid. The last question is, was an asset purchased? If yes, increase the asset and then determine if a payment was made. If yes, decrease cash. If no, increase a payable. Take a moment and review the thought process that you should use to record transactions. Let's walk through an example of recording transactions on a spreadsheet. The spreadsheet begins with all the accounts the company typically uses. Balance sheet accounts are cumulative, so start with the prior period ending balances. Read the first transaction and go quickly through the questions. The company sold inventory that cost $10,000 to a customer for $14,000. The customer will pay in 30 days. Were goods or services provided to the customer? Yes. Increase sales revenue. Was cash received? No. The customer will pay later. Increase accounts receivable. Was a service provided to the company? No. Was an asset used up? Yes. Inventory. So decrease inventory and record the cost of using the inventory, which is called cost of goods sold. Was a liability repaid? No. Was an asset purchased? No. Notice that the revenues are always recorded with a positive amount because they increase profits, and expenses are always recorded with a negative amount because they decrease profits. This will keep your accounting equation in balance. Let's do the same with the second transaction. Employees worked and the company paid them. Were goods or services provided to customers? No. Was a service provided to the company? Yes. Employees worked, and we call this salary expense. Was this paid? Yes. So decrease cash. Was an asset other than cash used up? No. Was a liability repaid? No. Was an asset purchased? No. Now let's do the same with the third transaction. Received a utility bill for $220 for this current month. Were goods or services provided to customers? No. Was a service provided to the company? Yes. Utilities were provided, so use utility expense. Cash was paid. Was an asset other than cash used up? No. Was a liability repaid? No. Was an asset purchased? No. Using the questions will help you identify what accounts change with each transaction. After recording all transactions, total each account. The accounts used and the total amount is reported on the financial statements. Example 2 is provided to show you how the spreadsheet is created for a company's first year of business. Read each transaction and go through the 6 questions quickly and determine the accounts will change. The accounts and amounts that change will be written on the spreadsheet. In the first transaction, the company purchased office supplies on account, and some of the office supplies were used up in the current month. Was a service or goods provided to customers? No. Was a service provided to the company? No. The company received an asset and will pay for it later. Notice the account names. Some of the supplies were used up, creating an expense account, and a decrease to the supplies account. The company purchased products to be sold to customers on account. Goods or services to customers? No. Service to the company? No. The company received an asset called inventory and will pay later. The third transaction. Paid $200 for advertising on a local radio station across the country. The advertising ran in the current period. Were goods or services provided to customers? No. Was a service provided to the company? Yes. Advertising. So the account advertising expense is used. Cash was paid, so cash decreases. The fourth transaction. Customers purchased products for $4,000 on account that cost the company. Were goods or services provided to customers? Yes. This is sales revenue. Did the customer pay or not? The customer did not pay, so accounts receivable is used. Was an asset used? Yes. Inventory. Inventory decreases and the appropriate expense account cost of goods sold is recorded also. In the next transaction, interest expense was incurred and will be paid later. Were goods and services provided to the customer? No. Was a service provided to the company? Yes. The bank yet let them use their money. This is called interest expense. Was cash paid? No. So record a payable account labeled for what it is called interest payable. The account accrued expense could also be used in this situation. In the next transaction, the company paid for rent for the warehouse for the current month. Goods and services provided to customers? No. Was a service provided to the company? Yes, the use of the warehouse. A service was received and the expense account is recorded. Was cash paid? Yes, so cash decreases. In the next transaction, the company paid $35 for utilities for the current period. Goods and services provided to customers? No. Was a service provided to the company? Yes. What was it? It was for utilities. Record utilities expense. Was cash paid? Yes. Decrease cash. The company received money from customers previously billed. Were goods and services provided to the customer in this period? No. Was a service provided to the company? No. Was an asset used? No. Did the company get an asset? Yes. The company got cash in exchange for accounts receivable. The customer no longer owes the company. The company purchased products to be sold to customers for $1,000. $200 was put on account. Goods and services provided to customers? No. Service provided to the company? No. Asset used to provide for customers? No. Was an asset purchased? Yes. That asset was inventory, so was cash paid? Some. That was the $800 difference. And the rest is owed, so when a liability accounts payable is used. Paid salaries to administrative employees who worked in the current period. Provided goods and services to customers? No. Was a service received by the company? Yes, the employees worked. That creates the expense account, labeled for what it is. Were the employees paid? Yes, so cash decreases. Paid $100 on accounts to suppliers. So, were goods and services provided to the customer? No. Was a service received by the company? No. Did the company receive assets? No. Was cash used to repay a liability? Yes. So cash is decreased and accounts payable is lower. Here is a look at the entire spreadsheet after recording all transactions. The accounts are totaled. The account names and the total amounts on the spreadsheet will be reported on the balance sheet and the income statement. The income statement reports all revenues and expense accounts to get to net income. Ending retained earnings must be adjusted for income and any dividends to owners to get the amount to report on the balance sheet. All assets, liability, and owner's equity accounts and the total amounts are reported on the balance sheet. Notice that the revenues and expenses that give the profit are included in retained earnings. After viewing this video, you should be able to record revenues and expenses on the spreadsheet and record the assets and liabilities associated with the revenues and expenses. You should summarize accounts and be able to prepare financial statements using the spreadsheet. Remember to go through the 5 questions. Please log on to StudyMyAccounting.com. The practices you learn will give you more examples of how to record on the spreadsheet. Work the practice test to verify your understanding and check your answers to the answers and explanations provided. Please write it out. This will really help you. Thank you for being prepared for class. It is much appreciated.